So, if you don't know me, my name is Bani or Trade Bani on social media, and I am a seven-figure funded trader, and I've been trading for around 5 years now, just 5 years. Okay, so it's taken me a very long time to get to this point, and one thing that I always say is that the trader is always developing, right? The trader doesn't just become better overnight. It's a thing where with every single day there's more experience and there's more to learn. So even though last year, for example, I was a profitable trader, a good trader, this year I'm even better, and next year I will be even better. That is one thing to take in mind for anyone that is wondering why have I not become profitable yet, or they're upset, they're still in the process of taking losses. It's actually very important to go through that stage, because if you don't go through that stage, you are probably never going to become a very, very experienced trader, because experience in the market is situational. The more you've seen things happen, the more you've, done something stupid, gambled on a setup or been slipped on a position, the more you've done these things, the more that you are going to understand how to combat it next time. I always say that you need to be burnt by the fire to understand how hot it is. Now that you know how hot the fire is, you're not going to put your hand in it again, right? So that's one thing. Traders are always trying to jump to the next step, but honestly, it's situational. And a lot of the advice that you'll get in this video, some people will listen, some people won't. But at the end of the day, it will come down to your own journey, where you really have to take a deep reflection at yourself and look at all the mistakes that you've made and how you can fix these things. Because most of the time in trading, it's a very obvious problem. Most of the problems that a trader goes through are problems that they know that they should not have done, and they have done it anyway. Now, the majority of this video will be answering questions that like-minded traders have actually asked. So if you're watching this, then similarly, you probably have a lot of the same questions. These questions were sent to me through the school academy, where I ask me some serious questions and I'll put the best ones in video idea, right? So the first question is, what's the biggest mistake traders make after getting funded? And I would say it's not necessarily a mistake. It's more the rush, right? You finally got that funded account. You've put such a pedestal on it for such a long time, and you believe that this is going to make you rich. That's the biggest mistake. It's the feeling of, oh, I'm finally funded. Your first funded account is not going to change your life, but it can. It can. Why? Because a lot of the time when a trader gets funded, I've seen this from my students a lot of the time as well, that once they get their first funded, it becomes like a gold mine after that. It might have taken them a while to get the first funded. Once they've got the first funded, it unlocks something in their mind that they know this is possible. And I always say to guys, after you get your first 100K, 50K is good, right? My first funded live was a 50K, right? So 50K is good, but once you get your first 100K live, that's when life starts becoming possible. That's when you can actually start making good money. And that's when you make profit splits and you have enough money to reinvest and continuously get more and more and more. That, I think, is the best point that a trader gets to. But going back to the question, the biggest mistake that traders make after getting funded is that now that it's live money, they believe that it's going to change their life. They're trying to change their life. With this 50K funded, for example, you're trying to make 10K. It's 20%. And you're not doing it by taking good setups. You're doing it just because you want the money. So the way to combat this is the trader should go into their first funded just saying that this is a weapon for me to be able to achieve more funded accounts. Just go for a simple 1 to 2 to 3% withdrawal. Even 1% is fine. Why? Because with some prop firms like FTMO, you'll also get the refund fee. And just that feeling that I know I've made, even if you've been losing for years, just because you'll have made some money back, even if it's only $500 plus the refund fee, $250. Or actually less, sorry, $300 plus the refund fee. You know, at least you can see that trading has done something, and that dopamine boost will be enough to say, I've got my first payout, I can get more and more. So yes, a trader shouldn't look at the first funded and think, I'm done now, I'm a funded trader, I'm the best. Because trust me, from my first funded account to now, I've still learned about 100,000 lessons along the way. Even though when I first passed my first funded, I was like, wow, I'm a funded trader. That wasn't completely life-changing. And although it did, tell me that I can do it again and again, it didn't change my life overnight, right? So that's one thing traders really need to understand, that they will not get to the next step unless they accept that the first funded is just opening a window of opportunities, but it's not going to change your life, right? The next question is, how do you deal with losing streaks while managing large capital? Well, there's many ways to talk about this, but one of the things that I have put in my private mentorship, I think I've spoke about it in the school as well, but I actually do risk diversification because I think that it's the smartest thing that you can do on funded accounts. So if I'm, for example, managing 5 live accounts, right? I'm not going to copy trade all of them and take the losses on all of them at the same time. What I'm most likely going to do is trade one of them or even 2 of them. And if I take a loss, I will rotate to the next account. Because what this means is that most of the time, I'm almost guaranteed a profit split in the month or multiple. So for example, this week, I've traded on 2 of my funded accounts and both of them are due a profit split. But I have another 4, 5, 6 accounts that I could be trading on. And I haven't. Because the dumb trader thinks in wins. If I traded on all of my accounts, I would have made a huge profit split. But the smart trader that's been through a lot and been through many losses understands that it's not just about maximizing the wins. It's about controlling the losses, right? So although, yes, if I copy traded all of my accounts, I would have had loads of payouts due. But I didn't think in that way. I think, what if I lose? So I've only traded on 2 of my funded accounts. And in that way, yeah, I'm due 2 payouts. But if I was to lose the trade and I copy traded on 5, 6 accounts, I would have had 5, 6 accounts in drawdown. That could have been bad on my psychology. So it's not the fact that I can't do it. I obviously can do it. It's more that it's just not smart to do. And it's smarter to just guarantee yourself money. So that's the smartest thing to do. I hope, people, guys, you can take that advantage of that even on challenges. If you have challenges, you've got 3, 4 challenges. Don't copy trade all your challenges. Trade them separately, or even trade 2 and 2, for example. You're putting your chances up of passing that account by a very, very large amount. But yeah, in the losing streak, apart from that, I'll always tell myself that this isn't going to last forever. I'll give you a good example of this. The first 2 trades that I took of 2025 were both losses, right? And my screen just went off. But did I say after I took those 2 losses, my year's over, or January ended up being such a great month for me. I ended January with 500k in funding plus added, and then I started the first week of February adding another 200k. So that was 700k done. And guess what? As I just said, I started January with 2 losses back to back. So did that go and tell me, oh my God, I'm done, my career's over, I've just lost my first 2 trades of the year? Yes, I was, I lost my first trade of the year. That's unfortunate. Second trade, I lost 2. It's annoying, but I know that if I stick to the model, and what I was doing at the start was deviating from that plan, I'll take 2 losses and change the model, or I'll do something else. But now I know that when I take a loss, it's not the end of the world. I know that if I follow my plan, I'll get back. And another example of that was from last week, I believe. I took 2 break-even trades in the week, and the third one ended up being a winner, which was the end of the week. Perfect. So when I took the first break-even, I was like, oh, it's annoying. I've wasted my time. That's how a trader feels, and that's raw advice. Like, that's genuine. I'm not smiling. Oh, I just lost, or I just took a break even. No, I'm not smiling about it. It's annoying, but I can't impulse about it. I can't go and like, revenge trade and blow all my accounts. Why? Because I've been there, I've done that, and as I said, I've been burnt by the fire. I've seen what it's doing nothing for me. I will just go back. I'm not going to spend my whole life getting all these accounts and just give them back to the market. So I think the best way to deal with the losing streak is I know that my strategy has worked. Why? Because look what I'm doing. Look at the payouts I'm getting. Look at the funding that I'm achieving. My model obviously works. So when I take a loss, I can't now just say it doesn't work. So the best way to deal with the losing streak is remind yourself that my model works. And the only way that you know that, having confidence in the model, is trading the model. and that's the best way to say it. You have no confidence in the model if you haven't traded it for a long enough period of time. So I can tell myself that I know after this loss that I'll get back because I've done it so many times. I'm not just pulling something and saying, oh yeah, this model's good. I know it's good because that's why I am where I am, because the model's good. So the bad trader, even if you have a mentor, you've got this model, he's put it all on a plate for you. You lost the trade, oh, the model doesn't work. That's why you'll always be in the same place if you think like that. And that's why at one point I was in the same place for a long time, because I was trying to create a model with a 100% win rate, which doesn't exist. Everyone wants to achieve a model with a 100% win rate. So every time I took a loss, I was trying to change the strategy. But then when I realized that I need confidence in my model, I then ended up trading this model for such a long time. That's when I was able to actually understand that, okay, that is really good, but maybe I can tweak that. So you don't change things, tweak, and really losing streaks are the best, especially when you're a beginner trader, because it's teaching you lessons. You're telling yourself that maybe I could go on higher time frame and have a better win rate. Because why? Because for the last 6 months, all the trades that I did were. That's why journaling is important, because you can create statistical information. If you don't do that, then you're just going to be in the same position for a very, very, very long time as well. How do you balance prop firm rules with your personal trading strategy? Well, my personal trading strategy is kind of, I guess, developed for prop firms, because that's the majority of what I do. I trade prop firms. I did trade personal for quite a long time. The whole start of 2024, I was really majorly only trading personal capital. But I'm Muslim, and it's been a debate in my mind if personal is even halal or not. That's a debate for another video. So although I had the capital to trade personal and I was doing well with it, it was just that debate. Like, I don't know if this is permissible, because prop firms are stimulated funds, which means it's better for a Muslim to do so. And I guess there's many more benefits for prop firms, which is, that you have really no risk on the table. If I've got 100k personal account, if I lose 5 trades in a row, I've lost 5k. If I have a 100k prop firm account, if I lose 5 trades in a row, I've lost nothing, right? The worst that I can lose is $500. That's the challenge fee. So my model, in simple terms, was kind of built for prop firms and refined for prop firms. And the way that I trade the challenge accounts is not the way that I trade the live accounts. The challenge accounts, I might slightly risk a little bit more because I have experience in the market, and I might stack an entry, for example. But in general, completely fine. I know the rules. I'll look at the FAQs for most of the prop firms before I even start a challenge. I mean, some of them have equity-based drawdown. I don't pick those ones. I pick balance-based drawdown accounts and things like that. Things that I know that will actually line up with my model. But yeah, if I know, I've got this profit target, I'm not gonna choose equity-based drawdown if I'm a swing trader, because when I'm holding overnight, my new balance is gonna change, and then I can lose all the profits. And a few times that's happened. So you just have to be smart with it, and whatever your strategy is, you have to obviously follow the FAQs in that sense. What's the best way to secure payouts consistently from prop firms? So just like I was discussing earlier, I do believe the best way, one, obviously already be a profitable trader. And number two, I think account diversification, obviously. So as I say, if I've got 300k accounts and on my first 100k account, I take a 1% loss. Okay, on the second 100k, I take a 1% loss again. On the third 100k, I take a 2R win, 2%, I can withdraw that payout. On the other hand, there could be a guy with a 300k account, so he's got the same amount of capital, and he takes 2 losses and then takes a win for 2R, he's still at break even. You do the math. Who's getting paid? You know, the only thing that people are going to argue with is, well, the 300k merged person will make more. That's correct. He will make more. But in terms of the question, what's the best way to secure payouts consistently? That's the best way to do it consistently. And as I say, now that I've got a lot of capital, I do merge my accounts, but not all of them. That's why I say I don't put all my eggs in one basket. As I said the other day, I took a trade on both of my live funded accounts, but I left all the other ones, right? Because I can do that. But if I was in the position, as I say, and I'm trying to stack up, I only have one account or 2 accounts, then it's going to be a little bit different. What are the strongest confluences when forming a bias? I say we don't act on confluences. We don't act on any of these things. We act on daily and weekly bias. The strongest thing ever. The weekly chart is bullish. The daily chart is bullish. Where is price going to? I look at the daily candle. What is price likely to do? If I know that the weekly candle looks like this, the daily candle looks like this, I'm going to be trying to trade in that direction. So even if I'm trading on lower time frame, like even 15-minute, for example, it is more likely for me to be correct if I'm trading in line with the higher time frame. That's the most simplest way of putting it. So I don't trade all of these secret models, anything like that. I'm just simply trading the higher time frame trend, higher time frame bias, and I'm looking, you know, a lot of traders on the internet, they're trying to show you this extreme bias, like look at me, or sorry, extreme model, that you need to do this. Listen guys, the best traders are the ones that don't overcomplicate it. The best trade is the easy trade. Some people say that's such an easy trade. It should be. Every trade should be an easy trade. That's how you become consistent. Okay, so that's all the questions from this guy. I'll go through some more as well. What are the biggest mistakes traders make when scaling up their funded accounts? So this is another problem that I went through. At one point, as I've told you guys in a previous video, I had one time merged all of my funded accounts together, copy traded them. I went through a drawdown period and I blew all of them, right? Looking back, it's so stupid. Because if I traded them separately like I do now, even though I lost like composure at that point, it's silly. And yes, I shouldn't have done it. I still made a mistake. It was dumb. It was a long time ago. But the point is, even though I made a mistake and it's my fault, it's gonna obviously put more pressure on you if you're copy trading 7-8 accounts at the same time and all of them are merged together. I take 2 losses in a row, all of my 8 accounts are in drawdown. That's not going to affect the guy that's got 8 accounts and 2 of them are in drawdown. You get what I'm saying? That's the way to be smart about your scaling. Can traders rely on prop firms for long-term income? So it's a very hard question, and I don't think there's anyone that can answer this because we're not in the back end. And like, I'm not in the back end. There are many prop firms that you shouldn't trust. And there are some that you think that you should trust, but who actually knows? Like, that's the thing. Like, I can say this prop firm is good, this prop firm is good, but at the end of the day, if we're not in the back end, we don't know. I think that the industry will last a long time. I believe it will. I can't say which ones will, but I think that there will always be some sort of prop firm in the space, especially because of the popularity. I mean, look at the revenue that these guys are bringing in. The prop firms that are doing it right, they're not just gonna completely shut down their business unless obviously there's regulations in place, and that could be a good thing as well. So short answer, we never know, but I think so. I think that we will be able to do so, but we can't say what ones, right? Everyone's gonna say the same thing, go with FTMO, but We can't say. We honestly can't say because it could be any prop firms. But yeah, I think that we can. Do you only use FVG, MSS, and drawn liquidity, or do you use other confluences like order blocks, breakers, dealing ranges, OTE? I only use fair value gap, drawn liquidity. Market structure shift, like, I believe my opinion on this is that there's a name for everything, right? And I think that all a trader needs to do is have a very, very good understanding on drawn liquidity, bias, and how to get in line with price. What you'll be surprised to know is many times I don't even enter off a fair value gap. I don't enter off anything except liquidity. So I might see a liquidity sweep displacement, no market structure shift, no nothing that, everyone's talking about. I just have a very strong conviction of bias from drawn liquidity displacement. I've entered, market enter, stop losses under, because I know that if my daily bias, weekly bias is correct, I can enter a position like that. That's one of the things that I had found out after I've been trading for a long time. I'd sometimes end the day and I'd see my bias was completely correct today. Happened to me loads of times. My bias was right again and again and again. But guess what? I would end the day with either no trades or I'd have a missed entry. Not all the time, obviously. Sometimes it would be fine. This is because I was always using a limit, right? Now I still use limits, but I'll tell you, that's when I refined my strategy in a way, because I had so much understanding of bias that I thought, okay, well, if my bias is very, very good and I see liquidity sweep displacement and I believe that this is higher low of the day, can I not have a market entry straight away with the conviction that this is most likely low of the day and then target where I believe that price is going to go? So in that sense, a lot of the time I wasn't looking for the retracement anymore, which meant that if price did come and give a retracement, that's fine, I'm in. And if price didn't give a retracement, I was still in, which meant that 90% of the time, if my daily bias was right, I'd win the trade. Obviously, I'm saying if my daily bias was right. Obviously, if my daily bias was wrong, I'd still lose the trade, obviously. But because I'm a very higher time frame and bias-based trader, it made sense for me to do this because, as I said, I didn't enter off fair value gap, order block, nothing. I'm looking at where it's likely for the daily and weekly chart to go. If I have a conviction of that from liquidity and displacement, I can enter the trade. And that, as I said, it helped me to have a lot more trade frequency and winning trade frequency. And it helped me to develop my emotions better because there was many times that I was not getting missed on the entry anymore, because I believe that the bias was always the most important thing. I mean, how can your bias be right the whole week and you never got an entry? Because everyone's waiting for price to come all the way back into the bottom of the range before they get the entry. That's how I switched. I stopped waiting all the time for the retracement. Sometimes I still do. But it'll be better for, obviously, you guys to see an example of this, which there are in some of the videos. But I can do an example, because don't just listen from what you hear. You should see it and test these things yourself, right? Have you ever felt like trading won't work? And what are some things that you've done to overcome that obstacle? Of course, I felt like trading won't work. Yeah, every trader's probably felt like trading won't work. And I think, what did I do to overcome that obstacle? Nothing. I just became better. That's the simple answer. I had the doubts until I made myself not doubt. Everyone else had doubts in me too, until I made them not doubt. So you're the only person that when everyone else is doubting you, you tell everyone, don't doubt me, but you're still doubting. And that's me. Everyone was like, oh, what's this guy doing, like, in my life? But when I was brushing it off, guys, give me time, I'll make something of myself. Deep down, I didn't know. That's the thing. Deep down, I didn't know. But I told everyone, nah, I know what I'm doing. And then I obviously ended up... So the doubt comes from being better. That's why every day you have to tell yourself, I need to get out of this doubt. How do I do that? By being better. There's no fix. Everyone's going to tell you, believe in yourself. You can't believe in the guy that's not doing it. So don't believe in yourself if you're not making it work. Prove to yourself. So short answer is, you can't overcome the obstacle if you've never overcame the obstacle. Do you understand? So what sort of long/short-term goals should people have if they are starting out, and also for people who already know the basics but aren't profitable? Get very good at a model. It doesn't have to be mine. Trade your model, and if you don't have one, you can watch my videos, right? Get very, very good at a model. Trade it for a very long time. Don't switch anything until you start to just refine tweaks. Like I told you guys, my entry was always the same. After a long time, I realized I could probably, do market entries instead of limit entries. And if my bias is right, I'll still win. That came after months, maybe even a year of trading the exact same thing every day. Then I realized so don't make a tweak too soon. The only way you'll get confidence is by trading something for a very long time. That's step 1. Step 2 is going to come itself. You'll get funded, maybe 50, 100K. Once you get that, start thinking about the long-term goals. How do I scale this up to the max? And there's so many things in this free school, by the way. If this is on YouTube, the school community is free. But there's so many resources in here that will help you scale up anyway. So start scaling up. Watch those videos on scaling and read the guide on scaling. How to recover from a deep loss of 8%. 8% down, account's gone, buddy. Nah, I'm joking. If you're trading prop firms, you have to understand this. Once you buy the account, you have to tell yourself what risk you're using first of all. If you are using 1% risk, go into the challenge saying, I take 10 trades, I'm done. I take 10 trades, the account's, I lose 10 trades in a row, the account's gone. You have to actually condition your mind to believe that. Because a lot of traders don't believe that they can ever blow an account. Condition yourself before you even buy the account that if I'm risking this, it's going to take me this many trades in a row to lose to just blow the account. Accept it first. In that scenario, now you are 8% down, okay? If you're still risking 1% and you now lose another 2 trades, the account is gone. And accept it. So that's it. Acceptance. Now, how do you recover if you wanted to recover? Then obviously the only thing that you can do in a smart way is just lower your risk to a very high extent. I mean, 0.25, 0.5% risk. 0.5, you still got, 4 chances. You could do that. But I believe that the time that's even going to take you to get out of drawdown is the time that it would take you to have a new account and just pass both phases. You're down 8%, you're going to need to risk very little to even get out. So the best way that a trader would even, overcome this situation is to accept the risk factors before you've even bought the account. Okay. What was your risk strategy to pass 700K challenges in a week? It wasn't in a week. It was in 2.5 weeks. Okay. But what my risk strategy was that I was scaling in positions. So I would have my higher time frame entry and I'd usually enter at the bottom of the range on a higher time frame. Okay. I might risk 2%, for example, but it's higher time frame. So as I say, a lot of people that don't understand the higher time frame are thinking that's a long, I've got a big stop loss. Me risking even 2%, most of the time I still won't incur a loss that's over 1%, because the higher time frame is so large that I can manage the position, and if price goes into my direction and displaces 50, 60 pips, I can scale in, move the first position to break even. So that's essentially what I'm doing. But there is a video in this free training that you guys can watch. It's exactly what I did. It's free. Watch it. But yes, what I will do is I will scale in the position, which will take the overall reward higher, but the risk will usually stay the same as the first position was at break even. And as I say loads of times to my guys as well, don't do multiple scale-ins if you're trading intraday, because then if you're wrong intraday wise, you'll probably lose both positions and now you're over risked. Why is it making sense to stack up on higher time frame for swings? Because if you are wrong about the second position, most likely the first one's covered or even in profit where the stop loss is. So it's a whole different scenario, right? It's the way to do it. How do you shuffle between funded accounts properly? I kind of answered this one. But yes, I make the payout or have a payout ready and go to the next, right? So this week I had 2 payouts ready on 2 accounts. I didn't end up trading a third account, but if I was going to, I wasn't going to go on the account that has the payout ready, potentially take a losing trade and just lose the payout. I will go to the next account now, right? Because I'm not going to lose a payout that's already there. I'll just wait for the date now. And yeah, is it better to swing or day trade? But yeah, it's depending on the person. I'm not the guy that says my thing is better, my thing's better, my thing's better. But I'll just tell you what I do. I swing trade because I believe, I'll tell you the story. The reason that I swing trade is because every week I used to do a weekly bias. And I'd find out a lot of the time that at the end of the week my weekly bias was right, and that I somehow either lost the trade or made 1% or was break even. Then I realized if my weekly bias, which is the easiest thing by the way, if my weekly bias is so good, why don't I just execute on my weekly bias on the higher time frame? Because I already knew that price was going to come into this higher time frame point of interest and reverse. So instead of overcomplicating the absolute high in this range on the 5-minute chart, why don't I just set the higher time frame bias, and then it made everything so much simpler. And I'd find after that there's hardly any week that my weekly bias is right that I would not have actually won the trade. If my weekly bias was wrong, of course I'm still going to lose the trade because the bias is wrong some of the time. But secondly, a lot of the time when the weekly bias is wrong, I still won't lose the trade because my weekly outlook will have not presented an opportunity for me to take the trade anyway, because there would have been no confirmation. But yes, of course I can still lose. I'm just saying it's harder for me to lose on higher time frame. My win rate on higher time frame is better. And with my day trade model, it still goes in line with the whole weekly and daily thing. That's why I say my model is so higher time frame based, because I'm not getting into a trade even for the day trade if it's not in line with the actual swing trade. So these are the things that these are my reasons. But yeah, it depends on your style of trading, right? What's the one thing that no one talks about when it comes to becoming a successful funded trader? You're going to doubt yourself so many times. This is a fact. There was a point where I believed that there's actually no way that people are even doing this for a living, because I was so beat down. So yeah, you're going to have so much self-doubt. And I guess a lot of people do talk about that. Everyone does talk about that, but maybe not to the extent. Because I guess you might watch my videos and think, oh, it's always been like that, or look at him. But I was flipping down bad. I was down bad. I would watch these guys on Twitter with 1 million in funding and be like, how on earth did that guy do that? And it's mad to see I'm in that boat too, But it's time. Time is and think about time as well. The guy who spent 4 years and he's put minimum effort is not going to get the same results as the guy that put 6 months in and went ham every day. Although trading, you don't go ham. That doesn't mean clicking buy and sell all day. Obviously, that's going to make you unprofitable and lose, right? But going ham is in learning, journaling, thinking about it, looking at the way the market moves. I would say because I was watching the market every day for years, that's kind of what made me a better trader, because I watched the market, not just trading it. Of course, I traded it and lost it again and again and again. But it's because I was watching it and seeing characteristics. And actually, you don't know a model unless you've traded it for a long time. You don't know how a concept. I can tell you a concept. I told you guys what my model is. A lot of you guys will go trade it tomorrow and lose. Why? Because you haven't watched the way that price actually moves the way I did. You haven't got the data like I do. You haven't got the conviction like I do. And you will if you trade and have experience in the market. There's obviously guys with way more experience than me. But 5 years in, I would say, yeah, it's experience. Everything is experience. How do you refine a strategy that works across different market conditions at scale? From what I'm understanding is, if the strategy is working, don't refine it. Simple. And you don't have to catch every market condition. If One major thing is that's the problem. Guys are trying to do that. Price is consolidating. Someone's what? Refine the strategy to win against the consolidation. Most guys are going to get chopped. 90% of people are losing their whole account that week, yeah? Don't refine, just don't trade. Okay, there's going to be market conditions where you just can't trade and you have to accept that. What are the biggest mistakes traders make when transitioning to funded accounts? They believe that it's a personal account. They trade it like a personal account. I did this too. I was spending 6 months on a phase one, you know? Or, like, you have to understand that this is not a personal account. It's literally cost me $250 for a 50K, $500 for a 100K. I'm not saying go full port it. Of course I'm not. But it's not a personal account. You have to be a little bit fearless. Accept the risk when you buy it. If I'm risking 1%, 10 trades, it's gone. Tell yourself that before you even place the first trade. Acceptance, and don't treat it like a personal account. A personal account trader with a very high balance is going to be more than happy with making 2% in a month. Funded, a guy trying to get funded is not going to be happy unless they hit the profit target. That's the way that it is, and that's the way it was designed. You could end the week up 6%, and then you look at, oh my god, I need 8% to pass. There was no setup though, but you're just going to trade anyway to hit 8%, and that's why you're break even. So don't treat it like a personal account. Understand that this was designed for you to fail. Think outside the box a little bit. How do you handle emotional swings after a big loss or a massive win? It's very easy for me to lie and tell you that a win doesn't make me happy and a loss doesn't make me annoyed, because that's a lie. I've been trading for a long time. It's not going to make me upset to the point I'm going to go cry and degen, and it's not going to make me happy to the point I'm going to jump up and down. Right? But of course, after I take a massive winner, I'm like, yes, what a trade, like that was sick. If I take a loss, that's unfortunate, like I'm annoyed. Of course I am. But yeah, I handle the emotions, although yes, I feel them. I just handle the emotions in the way where this is trading. I've seen what happens when I get too overexcited because of my experience. I've done those things, and I've seen what happens when I get too upset and revenge trade and degen because I've done those things. So experience is something that you can't teach. I know the implications of my behavior because I've had it happen to me many times. And I think we'll do these last two because this video is probably very long. What's one thing you believed about trading early on that you now know is false? Whoa, that's a really good question. One thing I believe to be true is, well, I'm not going to say that trading's easy because I didn't think that was easy. But one thing I know, beginner's luck isn't real. Everyone is the best trader of all time on their first few months of trading. Like, that's why I get these guys in my DMs and like, oh, I'm profitable after 2 months. Bro, it's been 2 months. After 2 months, I thought I was like gonna be Elon Musk. The amount of wins I was taking, somehow fluking them, I thought I was like on top of the world. So yeah, one thing I know to be true is that beginner's luck isn't real. Beginner's luck is real. And it's going to phase out. You're going to get slapped in the face one day. What are your top 3 tips for passing funded challenges in today's market conditions? Exactly what I do. And yes, I'm sure there's going to be someone like, oh, well, my way works too. I can only speak on my experience. And I know it works because I do it. If you want that, watch the free guide.